Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, we are back with a fresh week and now all the eyes will be on the US Federal Reserve's interest rate decision, given that we did see last week RBI delivering a 25 basis point rate cut and even a liquidity injection as well. But yes, last week the markets ended flat, but the RBI's dovish stance that helped Nifty to sustain above that 26,150 odd levels as well. Now today the GIFT Nifty trends have been pointing out to a muted start for our own markets, but if you look at the pre-open rates, that has been suggesting quite a mildly positive start for our own markets. But yes, we'll be watching out how the sentiment pans out for today and for the rest of the week as well. But yes, so far the global cues remain mixed. US markets did see a good Friday session, but for this morning, futures have largely remained unchanged. On the other hand, if you look at the Asia Pacific markets, they have remained mixed this morning, given that traders are awaiting a key data from China later today itself. But yes, on the commodities front, oil prices, they remain steady at their respective two-week highs, given that there was no breakthrough which was achieved between US and Russia talks over the Ukraine peace deal. That's why we did see no particular, movement coming in from the crude oil prices as well. But yes, from like we were talking about the commodities front, gold and silver prices, they definitely gained. Gold particularly gained on the back of Fed rate cut optimism, and even we saw silver hitting record highs on Friday on the back of this rate cut optimism as well. So yes, this week we'll be watching out for more commentary that is coming in from the US Federal Reserve, be it from the interest rate decision perspective or how the rate cut is going to pan out for the next year as well. But yes, we'll be watching out whether this event would be a market moving one for us as well. But for our own markets, we'll be also watching out for some single stock reaction. Fresh developments which is coming on Indigo, where DGCA has issued a show cause notice to the airline regulator, and a response has been sought by the airline by 6 p.m. in the evening as well. So we'll be discussing more of that in a bit. Other stocks, which includes your Biocon, Cochin Shipyard, we'll be taking a stock of these particular individual movers as well. So lots of action which is lined up in our show. So don't forget to post your stock related queries and we'll get to them in a bit. For now, let's take a quick check of the top headlines. Stocks on Wall Street end Friday's trading session higher as traders digested the core PCE data for September. The Dow gains over 100 points, while Nasdaq adds more than 70. The indices, however, end off the day's high in Friday's session. Asia Pacific markets trade largely higher as investors look ahead of China's trade data, which is due later today. However, the GIFT Nifty trends have been indicating a subdued start for our own markets. Crude oil prices are steady at two-week highs on geopolitical risks that threaten oil supplies from Russia and Venezuela. The gold prices gained on Fed rate cut optimism this week. The aviation regulator DGCA has issued a show cause notice to the Indigo's top executives as massive flight disruptions continue. The regulator has given time till 6 p.m. this evening, warning that failure to submit a comprehensive reply would result in ex parte action. And Biocon will be making Biocon Biologics a 100% subsidiary. The board has also approved a swap ratio for transaction and cleared a proposal to raise up to 4,500 crore rupees through a QIP. All right, in the last trading session, we did see that the Nifty did extend gains to the second consecutive day, given that RBI delivered a 25 basis point rate cut, and also they offered an OMO, which is your open market transactions as well. And of course, we did see a USD INR swap ratio. That is what the RBI also announced. But yes, if you look at the last week, the Nifty ended the week on a flattish note despite the upward bias. And of course, like we were talking about the RBI with the 25 basis point rate cut. This year itself, the RBI has cut about the rates by about 125 basis points. But yes, what led the market rebound in the last session, that was your banking and financial stocks. IT also outperformed, and auto index also outperformed the overall markets as well. But yes, what did not do well, that was your FMCG and pharma. That saw a certain weakness in the last market, and from the broader end of the markets, we did see that the mid caps had outperformed, but small caps continued to rise. So yes, a mixed trend which came in from the broader end of the markets. But yes, so what will guide today's trading action? Like I was talking about, two particular stocks, that is your Interglobe Aviation, and we had another stock in focus, that is your Biocon, on the back of the merger and acquisition news as well. That will be on back of the focus today. But yes, defense stocks which will also be in focus today ahead of Putin and Modi's meet. So yes, they will also be watching out on that particular front. And also from the primary markets, we'll be watching out for 5 main board IPOs which will be opening this week itself. Coming to the cash flows positions of where we stand as of now, FIIs, they stood as net sellers in the cash markets, sold stocks which was worth about 240 crore rupees. On the other hand, DIIs, they were the net buyers. They bought stocks which was worth about 38 crore rupees in the cash markets itself. Nifty put call ratio jumping to about 1.22 from 0.93 levels in the previous session. So some optimism coming in from there. And from the F&O ban list, Keynes Technologies, after we have seen a 40% drop in the stock on the back of some governance issues, we have seen that the stock has been added into the F&O ban as of now. And the stock that continues to be part of the F&O ban, that is your Bandhan Bank and Sammaan Capital. Both of these stocks continue to be a part of the F&O ban as of now. But yes, we'll be watching out how the pre-open rates and of course how our markets pan out today. If you look at the pre-open rates, Sensex is down about by 88 points. Nifty is also down by about 26 points as of now. So we'll be watching out whether or not this key sustained levels is, whether or not the market sustain these levels of about 26,000 or not. But yes, we did see that, in the last couple of sessions, Nifty did hit a record high level, and whether or not we can reclaim those levels is something we'll be watching out in today's trading session as well, and of course for the rest of the week as well. But with that, let's quickly get on board with our technical expert of the show. Joining me is Rajesh Palviya, Senior Vice President at Axis Securities. Rajesh, I mean, last week we did see Nifty ending flat, but for the last week. But yes, on the last session we did see some rebound coming in on the back of the RBI's rate cut. So for this week, what are the levels we can watch out next?
Good morning. So, looking at the broader market and the way Nifty is continuously trading about 26,000, 26,100 mark, I think the trend is likely to exhibit on the bullish side as Nifty managed to hold in the previous corrective move around 20-day moving average. So, which is a sign of it that near-term strength is still there in the market, and market participants are confident at this juncture. Looking at a little longer horizon, I think Nifty is moving in upsloping channel on a weekly as well as on the daily chart, which is a sign of sustained buying action. So I think till Nifty is trading about 26,100, 26,000 level, I think trend one should use any minor decline as a buying opportunity. Even on the Bank Nifty also, it has shown very strong recovery in last trading session. Though on a weekly basis, it was like a flat closing, but on the last trading session, it was very strong recovery. And again, Bank Nifty managed to surpass 59,500. That's the important, resistance area in the previous day. So I think if it continues to trade above 59,500, here also we could see more momentum to extend. And we may see a rally towards 60,000, 60,100 for Bank Nifty also. So here also one can use any minor decline as a buying opportunity. 59,400 needs to keep as a stop loss at this juncture.
Okay, all right. Let's also talk about auto stocks. I mean, they did well last week. And Rajesh, what do you think? Can it sustain its momentum? We've seen that the Nifty Auto Index has extended gains to about second consecutive day.
Yeah, so most of the auto stocks are in uptrend, and stock like Maruti, Ashok Leyland, Hero Motor, all these stocks are holding the strength despite so much of rally in last couple of weeks. Even Eicher Motor. So I think yes, the whole auto sector is looking attractive at this juncture, and the way technical setups are placed for these auto stocks, I think yes, trend is likely to remain on the bullish side. Buy on decline should be the strategy. Ashok Leyland would be our choice from these pack as stock is continuously trading in higher top, higher bottom formation, almost enjoying near to its all-time high trajectory. So we believe that Ashok Leyland can extend its gain. 168 to 175 would be the target on the downside. 156 needs to keep as a stop loss. Again, from two-wheeler space, Hero Motor, Eicher Motor, these two stocks are also looking attractive, and we believe that Hero Motor has potential to move towards 6600 on a short-term basis. So buy and accumulate would be the strategy with a stop loss of 6050.
Okay, all right. Those are the stocks we need to watch out for. Rajesh, what about IT stocks? I mean, they continue to trade well, and despite the muted market sentiment last week, also they did quite well. So, any place where you're finding value among the technology pack?
Lovisha, if we look at the IT index, this is the third consecutive month where IT index is making higher high low formation, which is a sign of some recovery as well as sustained buying action has been played out in this IT stocks. In last couple of days, what we have seen that with mid cap IT, large cap IT also participated. So I think stock like TCS, Infosys, as well as Wipro, all these stocks have moved up and managed to give breakout on the near term structure. So I think if Nifty IT continues to trade above 38,300, 400 zone, I think here also there is a potential to extend its gain towards 39,000 to 39,300. So some more pullback or some more recovery we could witness in large cap IT as well as in the mid cap IT. From large cap IT, TCS, Wipro would be our choice. From mid cap IT, I think Emphasis, Coforge as well as Persistent, these three stocks can be looked at, and I think the setup is looking very attractive. Even LTI Mindtree is also looking attractive. So I think mid cap IT is looking more promising compared to large cap IT, but we believe that whole sector can perform in near term as rupee weakness, dollar strengthen is giving edge to this counter. So I think that's the immediate trigger for the counters, and I think we could see some another 2 to 3% kind of up move from the current level.
Okay, all right. That is the view coming in from the IT stocks. Of course, in the last session, we did see that the realty stocks had taken quite a bit of a mojo on the back of the RBI's rate cut decision as well. Rajesh, what can we expect? Can we expect this trend to sustain in the upcoming days?
So they are direct beneficiary of this rate cut, and I think the most of the real estate stocks have corrected and now consolidating since last couple of week. Looking at the near term, short term structure is still most of the stocks are still in the consolidation range. But from real estate space, I think Prestige State where we feel that technical setup is much better compared to other IT stocks. We believe that if Prestige manages to cross above 1720, 1730 marks, so I think then here we could see some rally to unfold and possible target towards 1800, 1820 we could witness in the near term to short term. So Prestige one can focus at this juncture. 1650 needs to keep as a stop loss. On the other real estate stock, I think DLF is showing sign of recovery from lower level and has taken the support from its previous swing low area of around 700 705 zone. So 705 is the key level to watch for DLF if it's continues. So some pullback we cannot rule out for the DLF towards 740.
Okay, all right. DLF towards 740 as well. All right. Those are the realty stocks we need to watch out for. But yes, the first trades coming on your screen where we have opened on a muted note. If you look at Nifty, still has opened, quite flat with a negative bias as of now. 44 points decline coming in for the benchmark index. Sensex has also cooled off, seeing a decline of about 80 points, flat to a negative start for the Sensex as well. Bank Nifty also seeing a decline of about 96 points. Nifty mid cap has been sulking in the trade, a 0.1% decline coming in from there as well. While we did see that the global cues were fairly mixed, US markets did well on the Friday, and then Asia Pacific markets were fairly mixed this morning itself. So, there's not much of a cue for the Nifty as of now. But yes, we did see that on the Friday session, RBI did cut their interest rates and of course they revised their growth guidance as well. So we'll watch out that from a macro fund whether or not in Nifty and of course the Indian markets can pick up from there on. But yes, for now it's the level we have slipped below the 25 150 odd levels as of now. Let's take a quick look at how the sectoral indices have been faring as of now. If you take a look at the bank Nifty Auto Index, it's showcasing a decline of about 0.2% after 2 days of consecutive gains that the Nifty Auto Index has seen, a little bit of a profit booking has kicked in from there itself. But yes, on the other hand, if you look at the Bank Nifty Index, where it has opened, 0.2% decline coming in from the Bank Nifty Index as well. On the other hand, if you look at the Nifty PSU banks, also they are seeing a decline of about 0.1%. Majority of the sectoral indices have slipped in the negative territory, be it your IT stocks or even FMCG, pharma, all of them seeing a decline of about 0.1 or 0.2%. Nifty oil and gas, however, has been seen doing well, seeing a flat to a positive start as of now. On the other hand, if you look at Nifty Media Index has also opened up quite in the green. However, if you see majority of this sectoral indices have plunged in negative territory as of now. But let's take a quick look at the top gainers and losers. Tech Mahindra doing well, 0.2%, 0.5% gains coming in for this IT stock. On the other hand, Reliance Industries has also been doing well, 0.4% gains coming in for Reliance Industries as well. Tata Steel, Axis Bank, Max Healthcare also on the top gainers on the Nifty 50. On the other hand, if you look at some of the other losers on the Nifty 50, Bajaj Twins leading the decline with about nearly 1%. Cipla also not doing well, 0.5% decline coming in from there as well. Interglobe Aviation seeing once again a decline of about 4%. We've seen in the past 5 days that the stock has already seen a decline of about 9%, and today also we are seeing that the stock has taken a bit of a knocking. Nestle also not doing well, Maruti Suzuki, Sun Pharma and HDFC Bank, some of the other losers on the Nifty 50. But yes, let's talk about the key stock of today, that is your Indigo. Definitely seeing a decline of about 4%, one of the top Nifty losers. And also we did see that the DGC has granted the airline operator about a 24-hour extension to respond to its show cause notice, and they've said that the failure to submit a comprehensive reply within the extended timeline will result the regulator proceeding with an ex parte. Yesterday, we also saw that the airline cancelled about over 650 flights, and so far now the airline regulator has already cancelled at least 6,000 flights itself, which has impacted about plenty of passengers itself. Rajesh, today once again Indigo seeing a knock of about 4%, and in the past 5 days also we have seen that the stock has declined about 9%. So how should investors view this decline at this point of time?
So if we look at the aviation sector, so Indigo, it is having a major market share for this sector, and looking at the corrective move, I think if we analyze on the long-term perspective, still strength is there on the long-term chart, but on the near-term structure, yes, stock has broken near-term support area. And looking at this corrective move, I think the next major support would come at around 5,000, 5,050 kind of zone. So that's the level where one can focus. So if it breaks below 5,000, then we may see more liquidation in this counter, and then stock can slide further. But till 5,000 levels are intact, I think some buying interest would emerge around those levels. So, but don't be in hurry. Let the stock to settle down. Let the this support area to confirm first. If it's not breaks below 5,000 in next 1 or 2 trading session, then one can use this decline as a buying opportunity.
Okay, all right. Can be used the decline as a buying opportunity for Interglobe Aviation. We'll be watching out more news developments coming in from this front as well. All right, let's move on and talk about the next stock in focus. That is your Biocon. The stock has not been doing well despite the company saying that they plan to integrate Biocon Biologics as its wholly owned subsidiary in a deal which is valued at about $5.5 billion. Now, we did see that from the con call itself that the management has said that both of these companies' merger will see synergies such as supply chain procurement, and they expect many operational advantages also coming together. Rajesh, coming to the stock is seeing a decline of about 1.5%, and last month also we saw the stock reached about that 420 odd levels, but now it has cooled off. So what can we watch out next?
So if we look at the near-term, short-term structure, the major supply zone is placed at around 410 to 420 range. This is the major supply zone and on the near-term, short-term chart. As these ranges acted as a multiple supply since last couple of months. So until the stock not crosses above 410, 15 kind of zone, I think we may see some consolidation in range of 380 to 410. Any breakout above 410 can attract more buying action. But till the time, I think one needs to follow a stop loss of 380. That's the important level for near-term trend. And I think if it's able to hold this 380 level in this decline, some pullback action we may see from those levels. So keep close watch around 380 level, which is very important for near-term trend.
Okay, all right. That's the view coming in from Biocon. Let's take some of the viewer queries that is dropping on our live screen as well. The first query coming in from Naveen is asking whether or not it is the right time to enter Keynes Technology. Of course, we've seen that the stock has seen significant, attention in the past couple of sessions on the back of the brokerage note that came out from Kotak Institutional Equities, which they highlighted certain accounting discrepancies and, of course, certain, disclosure-related arguments as well. And the stock, in the last session also saw that the stock plunged to at about 8-month low itself. Rajesh, what would you suggest Naveen to do at this point of time? Would you suggest investors to look at this decline as a right time to enter?
No, I'll say avoid at this juncture as structure has already weakened for medium term to long term chart also. Stock has broken the monthly support area also. So I think we may see, further more liquidation of liquidation pressure in this counter. So at this juncture, 4,000 would be the next level. So wait for those level. If this supply pressure settle down around those level, then one can look to buy, but with strict stop loss of 3,800 that needs to keep in mind, because as this is the third consecutive month where major supply is taking place in this counter, and this corporate governance issue is still going to have impact on the investors, and I think they will try to exit in minor pullback action. So I think wait for this news flow as well as the supply to settle down at certain level. But on the higher side, 4,800, 5,000 are the key resistance area. So that needs to cross if stock has to attract a more gain.
Okay, all right. So wait some time before you enter the counter as of now. That is your Keynes Technology. Today also the stock is seeing a decline of about 1% itself. All right, let's move on and talk about, take another viewer query. We have Naveen who's also been asking the view on L&T Finance on how this particular counter looks like. Of course, so far this year, the stock has seen quite a secular uptrend itself. Rajesh, what's your view? I mean, from starting the year with about 130 odd levels, the stock has reached about 308.
Yeah, clearly stock is in uptrend, and now stock is consolidating after a strong rally in last couple of months. Looking at the overall structure, we believe that till stock is trading about 298 to 300 mark, I think trend is likely to exhibit on the bullish side only, and strength we could strength could continue further more upside. On the higher side, once stock crosses about 315, I think the next target we may see around 325, 330 zone also. So hold the position. Trailing stop loss should be the right strategy. Trail your stop loss at 300 level.
Okay, all right. 300 odd levels for L&T Finance as a stop loss as well. All right, let's take another viewer query. We have Satya who's been asking the view on Apollo Microsystems on how this particular counter looks like. The stock did see a September high, but since then, since the high from September, the stock has cooled off, Rajesh. What do you expect the investors to do at this point of time?
Yeah, stock has corrected, and now stock is now trading near to its multiple support area, which is placed at around 255, 260 zone, which is very important for the stock. If stock's able to defend this 255 level in this decline, then some pullback we could see, as already time and price correction is already taken place in this counter. So 255 needs to keep as a stop loss at this juncture. If it's hold, then some buying action cannot be ruled out, and then it's in pullback. 265 to 268 would be the first area where some supply would come, but if it crosses about 268, I think then we could see some reversal trade towards 280 also. So range bound activity 255 to 268 would be there for next couple of trading session for this counter.
Okay, some range bound movement anticipated for Apollo Microsystems then. Let's take another viewer query. On that note, we have Nana Prakasham who's been asking the view and emphasis on how this particular counter looks like. Rajesh, what's your view? I mean, in the past 1 month, the stock has seen a little bit of a buying interest. Past 1 month, we've seen 5% gains. What can we watch out next?
Yeah, so stock has shown a decent rally in last couple of week, and looking at the near-term, short-term structure, stock is now approaching towards its immediate hurdle, the major hurdle of 3,000, mark, which is very important for the counter. If it's able to surpass 3020 level on a closing basis, then yes, there will be a breakout play on a daily, weekly, monthly time frame, and then possible extension of rally towards 3200, 3300 we could see. So I think those who are already on the long side of trade can hold the position at this juncture. We would suggest to keep revised stop loss of 2870 to hold the position.
Okay, all right. Hold the position for emphasis then. Let's take another viewer query. We have Satvika who's been asking the view on Acme Solar Holdings on how this particular counter looks like. In the past 1 month, Rajesh, we've seen the stock seeing a sharp slide of about 18%. What would you advise to do at this point of time? Should she hold this particular counter?
No, I'll advise to exit as structure is weak and stock is continuously in downtrend. This is the sixth or seventh consecutive week where stock is continuously showing a sustained supply pressure, as stock has already broken all its near-term, short-term, even long-term moving averages. So weakness is there in this counter, and there is no recovery despite stock has corrected so much. Stock is in oversold trajectory, so some pullback cannot be ruled out, but still I'll suggest ki if you get any pullback, try to find out the opportunity to exit, as the major supply zones are placed at multiple levels like 225, then 240, 250. All these levels are going to act as a supply zone for the counter, as stock structure has already turned weaker.
Okay, all right. That's the view on Acme Solar. Let's take another viewer query. We have Raghu Shah who's asking the view on Gabriel on how this particular counter looks like and whether it's the right time to add. Of course, in the past 1 month, we've seen that the stock is slid by over 20% itself, and plenty of brokerages have given out a sell call on the counter because they believe that the stagnation in its sunroof business is something that is weighing on the counter's long-term trajectory as well. But from a technical perspective, Rajesh, how does Gabriel look like for you?
So I think stock is in corrective mode. Looking at the near-term, short-term structure, still some more downside we could see. Stock is now trading near to its important support area of 900, 870, which is very important for this counter on this corrective mode. If it's break below 900, 870 marks, so I think then we may see more profit taking to initiate, and then stock can correct further towards 800 mark also. So, those who are already on the long side of trade should follow the stop loss of 880, 890 zone. That's the immediate stop loss for this counter in this correction. If it's break, then exit. In pullback, the major supply zone will be there at around 1040 zone. That's the immediate challenging level in pullback. So that level needs to watch. If it crosses about 1050, then we may see some recovery to play out, and then stock can attract more buying action, and then 1100, 1200 would be the next target. So long-term structure is bullish, but near-term, short-term structure is still showing sign of more profit taking.
Okay. Near-term structure looks like there could be more profit taking for Gabriel India. All right, let's take another query which is on an auto ancillary company. That is your Aisha, who's been asking the view on Fame Industries for the short term. Fame Industries, of course, the stock has seen quite an uptrend so far this year itself, 51% gains. In the past 1 month also, the stock has seen good buying traction. Rajesh, would you say that the stock is expected to extend gains in the going into the near term?
Yeah, I think stock is holding the strength, and the way stock is now shaping up, there is a flag formation is taking place on the daily chart. Stock is holding its 20-day moving average in this mild profit taking. So I think till stock is trading about 2200, I think trend is still on the bullish side. Any breakout about 2350 can attract more buying action, and then possible rally towards 2500 we could see. So I think hold the position with stop loss of 2200 for FM industry.
Okay, all right. 2200 as a stop loss for Fame Industries. Let's take another viewer query. We have Raghucha who's been asking the view on Cochin Shipyard and whether it's the right time to accumulate. Yesterday also we did see that the counter signed a significant shipbuilding contract with Denmark-based Svitzer to build 4 electric transverse 2600 e-tugs as well. However, if you look at the stock, it's quite flat as of now. There's no change. And in the past 1 month also, the stock has slid about by 4% and it has been fairly range bound. Rajesh, what's your view on Cochin Shipyard?
Stock is in corrective mode and stock is now trading near to its important and multiple support area, which is placed at around 1500 1450 zone, which is very important and critical for this counter. Any breakdown below 1450 may attract more, unwinding trade. But till these levels are intact, I think some pullback action we could witness in the near term perspective as the stock is now negotiating with its falling trend line on the daily chart. So any breakout above 1680 can attract more buying action and then possible pullback towards 1740, 1750 we could see. So at this juncture, I would advise for near-term trader 1600, follow the stop loss of 1600. In pullback 1670, 1680 is the immediate challenging level. If it crosses, then hold the position for 1740, 1750 zone.
Okay, all right. That's the view for Cochin Shipyard. Let's take another viewer query. We have Preeti Singh who's been asking the view on Fortis for a fresh entry at this point of time. Of course, the stock has been in corrective mode, Rajesh. But what's your view? I mean, can the trader accumulate or enter the stock at the current price point?
I think overall long-term structure is bullish as I can see on monthly chart. Stock is now almost trading near to its channel, this upsloping channel support area. So 860, 850, one can keep as a stop loss if you want to buy here. If it's break below 850, then exit. As long-term structure is bullish, and I think this is the second month where stock is attracting some profit taking. So those who are looking for little positional to long-term perspective, they can use this decline as a buying opportunity. Keep 850 as a stop loss, and I think in pullback 940 would be the first level where stock may attract some supply pressure. If it surpasses those level, then again we could see resumption of uptrend or long-term trend would again resume, and then we could see higher level beyond 1000 also.
Okay, all right. Beyond 1000 is also possible for Fortis Healthcare. Right, let's take another viewer query. We have Amma who's been asking the view on Canara Bank and City Union Bank on how both of these counters look like and whether they can be added at the current price point. Rajesh, any views on the counter? Of course, if the entire PSU bank has seen quite a good rally this year itself and over the past 3 months as well. So, would you suggest a right time to enter both of these counters?
Yeah, we hold a bullish view for most of the PSU bank, be it Canara Bank, Bank of India, Bank of Baroda, even SBI. I think whole PSU banking basket has shown a very good buying interest and holding the strength on the near-term, short-term chart also. Though there was some profit taking in last couple of days, but still near-term, short-term structure are still holding the strength. And we believe that, for Canara Bank, 142, 144 are the important level. If it continues to trade above those level, again, we could see some upward momentum towards 154. And once the stock crosses this level, then next target would be around 165 to 170. Again, for City Union Bank, here also, if we analyze the near-term, short-term structure, stock after this corrective move, stock is now available near to its important support area of 265 to 268 zone. So I think those who are looking for buying opportunity, it's a right entry price to buy this counter as overall structure is bullish. Once stock crosses about 280, I think here also we could see resumption of uptrend and then next target around 290, 95 we could see on the short term perspective.
Okay, okay, all right. Rajesh, just one last question before we let you go then. Now, what are your top picks? Let us know what you're finding interesting in the markets at the current price.
So I think again one can focus on some of the mid-cap IT stocks. First one is Coforge where we are focusing. I think here we could see some traction and possible target of 2030, 40 we could see in the near term. On the downside, 1950 needs to keep as a stop loss. From banking basket, I think Federal Bank is continuously showing a sign of strength and the way stock is almost consolidating at its all-time high trajectory. I think here we could see more traction, possible target of 270, 275 on the short term basis. So buy and accumulate would be the strategy. 252 should keep as a stop loss at this juncture. So I think these two stocks where we are focusing, and another sector where we are focusing is from the pharma space. And I think from pharma, one can focus on Sun Pharma. That stock is also managed to give breakout in the last couple of week. And looking at the breakout on the weekly, monthly chart, we believe that this stock has also potential to extend its gain. If it's able to sustain above 1780, I think the next target around 1830, 1840 we could see for Sun Pharma. So here one can look to buy with stop loss of 1780.
Okay, all right. Federal Bank and Sun Pharma, both of these counters we need to watch out for. But all right, with that, we have to let you go. Rajesh, thank you so much for your time and joining us.
Yeah.
All right, let's take a quick check of the markets before we move on to our next guest of the show. If you look at Nifty, it has slipped by about, right now, it has slipped by about 46 points. It's still below that 26,150 odd levels. Sensex is also down by about 140 points as of now. And you can see both of the indices have been slipping into the negative territory. On the other hand, if you look at the Bank Nifty index, it's down by about 0.3%. The broader end of the markets remain mixed at this point of time because the mid-cap index has been flat to a positive bias. Small caps showcasing a decline of about 0.2%. On the other hand, if you look at from a sectoral perspective, Nifty IT stock, Nifty IT index has picked up pace, 0.3% gains coming in from the IT pack. Nifty Metal Index is also showcasing a gain of about 0.2%. So yes, all in all, you can see IT and metals, both of these driving the markets ahead and of course limiting the downside in today's market. However, on the losers front, you can see Nifty Auto Index seeing a decline of about 0.3%. PSU banks also trailing. Nifty Realty Index also snapping its two-day gains with about 0.7% decline. So yes, all in all, it's a mixed picture for the markets, and whether or not we pick up from here on is something that we need to watch out for. But yes, with that, let's quickly move on to our next guest of the show. We have Gaurang Shah, Senior Vice President of Geojit Financial Services, joining us to discuss about how the market sentiment pans out for the longer term horizon as well. Gaurang, good morning. I mean, we have the RBI's rate cuts with us, and but the rupee's weak movement that continues to be a warning sign for majority of the market sentiment. So, do you expect this to stabilize in the near term, or is that some time away?
Thank you so much for having me on the show. Good morning to you and to all the viewers of moneycontrol.com, CNBC TV 18. A small disclosure before I go any further that the recommendations that I'll be sharing this morning on the show are part of our research team recommendations on the fundamental side, long-term point of view. Our company Geojit or I, we do not have any personal investments, no financial interest, no conflict of interest. But we give recommendations to our clients on similar lines. They might have their investment interest. To answer your question, I think the rupee weakness is largely to do with the kind of sell-side figure that we've been constantly having from the FIs and the dollar demand at this other side. Possibly, if you ask me whether we are at the end of rupee depreciating against the dollar, I would possibly take a view that yes, we are at the bottom. From here, there is a scope of rupee strengthening rather than rupee weakening against the dollar. RBI Monetary Policy Committee meeting and of course the statements made especially with respect to the OMOs and more importantly the 3-year swap buy sell dollar. I think that should possibly stabilize the rupee as we go into the future. So from here on, I think the weakness is done and dusted in the INR against the USD, and possibly you might see a little bit of scaling up of strength in the rupee against the dollar.
Okay. Gaurang, you said that it's bottomed out. Would you say that the Fed's policy decision this week could also make the current local currency move or appreciate, or is that just already factored in for the markets?
So I think 25 basis point, if that is what Mr. Powell is going to announce on 10th of December, if I'm not mistaken, is the policy meet, US Fed policy meet. Late 10th evening, we'll possibly have the outcome of that and we'll react to it after that. So if it is going to be 25 basis point, I think it's already factored in. I don't think it's going to be anything more than that. And of course, the verbatim that Mr. Powell will be sharing in terms of the outlook on the economy and further rate cuts in case if there is a possibility before he goes out.
Okay. All right. Gaurang, we did see that the majority of the banking majors, they had already announced that their margins would bottom out in the September quarter. Now, with the RBI's rate cut, do you see this picture to be a long and painful one?
I don't think so because see, what happens is that every bank has their own cost of borrowing and cost of lending. And the fact is that we all know that India has been one of the leaders in terms of rate cuts, while rest of the economy and the world is struggling with inflation and interest rate cuts and GDP growth rate. We are in a very sweet spot. 10-month low on the inflation, 18-month high on the GDP. This had to happen, though there was a section of uh, voices in the market that said that because the rupee is at its worst against the US dollar, maybe there won't be any rate cut. But we have to manage our cost of borrowing and in lending. We, as a brokerage house, Geojit Investments Limited, remains extremely positive on the entire BFSI segment, wherein we have a buy recommendation on certain PSU banks, certain private sector banks, strong NBFCs. And my personal view is that if you have a portfolio in the stock market, I think a dedicated 15-20% of that portfolio should be dedicated to the BFSI segment because we expect the performance to improve. Some banks may possibly underperform because of the cost of lending and borrowing and the spreads over there. But I think stronger banks will continue to attract a lot of spotlight from long-term investment.
Okay, okay. Gaurang, what about insurance space? I mean, how are you placed over there? Because since the GST announcement, we've seen majority of the stocks exhibited a mixed trend. We did see we did see some, benefits of input tax credit also got wiped out. So we also have the amendment bill which is awaiting for us in the parliament. Do you expect this to provide a re-rating for the sector going ahead?
See, for a fundamental view, what is important is how the earnings is going to be. And I think there has been a lot of improvement in terms of earnings, especially with the new business and new premiums. And the fact is that a lot of people have now started to take insurance very seriously and term insurance specifically with a higher sum assured. And now, by the virtue of higher sum assured, the premium outgoes are on the higher side. Uh, so we are positive on both life and non-life. On non-life, we have a buy coverage on ICICI Lombard. On the insurance side, life insurance side, we are positive on LIC, HDFC Life, SBI Life, and ICICI Prudential. But my one point that I would want to make over here for all your viewers is that have 1.5, 2 year kind of time horizon in case if you eventually decide to invest in life insurance related companies. So we expect it to perform well.
Okay, okay, all right, all right. Now let's discuss about some of the individual stocks which have been, gaining headlines this, last week and now this week as well. We'll first talk about Keynes Technology. Plenty of governance issues, and then we saw the financial inconsistencies as well. The stock also plunged to about 8-month low. So does that make you wary about the entire EMS space at this point of time?
So I think one company, one management, because they missed out on certain fine notes during their second quarter earnings, should not be a thumb rule that you should paint the entire sector with the same brush and color. We at Geojit are extremely positive about the entire EMS stroke semiconductor stroke PCBs. We have coverage on two companies, CG Power and Industrial and PG Electroplast. Uh, Government PLI scheme is very supportive, and my sense is that and these companies have run up also, whether it is Keynes Technology or a Dixon Technology or a PG Electroplast or a CG Power or any other company. Uh, they had run up quite a bit. Undoing of one company should not be a single decision-making factor to exit the sector. I think this sector has got a lot to prove in terms of future growth. So we remain positive on the sector. Keynes Technology, we don't have a coverage, so I won't be any specific. But I think we had last week, we had the management on CNBC TV18 itself and sister channels trying to reason out as to what went wrong and how they're taking care of it. But I think it's rather unfortunate that these kind of events unfold in a listed company.
Okay, okay. Let's also talk about Indigo. I mean, we've seen that the stock, once again, it's seeing a decline of about 4% in today's trading session. In the past 5 days, we've already seen that the stock has seen a knock off about, 9% itself. I mean, we've seen about 6,000 flight cancellations on the new FDTL norms. We have the DGCA, who also is, trying to, convene a 6 p.m. meeting where they are saying that, they have given out a show cause notice to the airline regulator and now they seek a response from that. But what does it speak for our aviation sector? Today we are seeing that SpiceJet shares are seeing a little bit of pull up, 13% gains. It's a classic duopoly, and of course one operator faces challenges and the entire system is taking a shake up. So what are your thoughts on this particular sector, and of course on individual stock as well?
Well, so let me give a very honest disclosure. We have a positive coverage on Interglobe Aviation for a very long time. But this is my personal view. It is rather unfortunate to see an airline with a 65% market share create the chaos that they have created. It was unwarranted. You had enough time on your hand to rope in new pilots, because this rule was nothing that happened in 12 hours or 24 hours. It was there for last 2 years. You were told about it. An unfortunate part is that the Director General of Civil Aviation did not take cognizance of the status, and the result was that poor passengers had to pay for the mess that was created by Interglobe Aviation and its management. Having said that, I think this should be dealt very seriously by the government and the DGCA. Highest amount of penalty should be imposed upon Interglobe Aviation, and along with that, everyday monitoring of how the situation is going to evolve and improve, and what are the efforts that have been taken by the Interglobe management to resolve this mess that they have created. Yes, because of the mess that was created by Interglobe Aviation, we saw other airlines fare skyrocketing, but now there is a cap that has been put in place again by DGCA and the government. So till the time, I think the management has asked till about 15th of December to streamline and bring things under control. Waits to be seen how it is going to work out. And you are holding the entire nation and the government and the authority at the point of the gun because of the mess that you created. Rather unfortunate, but yes, we remain positive from a long-term point of view. Near term, there should be problem, there should be pressure. I think it has corrected almost 10% with today's correction and last week correction. It should get resolved. Let us say that the management will take all responsibility and do the needful. But yeah, short term, there could be a little bit of pressure on the stock price, depending upon the numbers, the hit that they're going to take.
Okay, all right. We'll watch out whether more of the news developments coming on this front as well. But yes, apart from that, Gaurang, tell us some of your sectoral or thematic bets. What are you finding attractive at this time? Where are you on the sidelines? We discussed about BFSI and EMS, but apart from that.
So I think cap goods, engineering, cement, these are defense, power generation, autos. These are primary, some including the entire BFSI segment. So these are some priority 5 to 6 sectorial themes that we believe will work out well from a long-term point of view, and extremely optimistic about the earnings delivery also, not only for the third and the fourth quarter this financial year, but going into the next financial year. I think these sectors should perform well. A couple of names, if I have to possibly spell out. So we are positive on State Bank of India and Bank of Baroda amongst the PSU banks, Kotak Mahindra Bank and ICICI Bank amongst the private sector banks. There are other coverages also. In the defense universe, my sense is that names like BEL and MTAR Technologies, which is in the news for all the good reasons because of certain orders that they've got and the opening up of the nuclear sector, nuclear power, and the announcement made by the Honorable Prime Minister. I think this company should do well. Already been an outperformer for the last couple of years. Continues to remain positive on MTAR Technology and BEL amongst the defense plays. And cap goods engineering, Siemens and L&T are the two names that we are extremely positive on. Cement, a mid-cap company called Dalmia Bharat, and the large-cap boy in terms of highest manufacturing capacity in cement, Ultratech. And autos, I think M&M and possibly Hero MotoCorp. So these are some, thematic ideas that we have.
Okay. And something that you're conservative on, something you're, advising investors to, remain on the sidelines for the time being?
So I think infrastructure remains to be a pain point in terms of getting approvals and getting the work done at ground level, and maybe in a short to medium term, real estate. So these are the two themes, where you need to be a little bit cautious. And if you eventually have the appetite of high risk, only then you should venture in.
Okay, all right. Real estate is something that investors should take a caution of. All right, Gaurango, with that, we have to let you go. But thank you so much for your time and
Thank
connecting
you.
with us.
Always a pleasure. Thank you so much.
Thank you. All right, let's take a quick check of the markets of where we stand. If you look at Sensex, down about by 250 points. Nifty has also slipped below that 26,150 odd levels. It's hovering around the 26,100 odd levels as of now. Down by about 86 points, so to say. India Wix has spiked up. 4% jump is what we are seeing on the India Wix level front. And from the broader end of the markets, we continue to see a little bit of a mixed reaction from that particular front. If you look at the mid-cap index, it's showing a little bit of a flat to negative bias. It's seeing a decline of about 0.3%. If you look at the small cap index, that is also sulked. It has slipped into the negative territory as of now. But yes, from a sectoral point of view, Bank Nifty index showcasing a decline of about 0.1%. Nifty Auto Index is also seeing a bit of a knock, 0.5% decline coming in from the Auto Index pack as well. If you look at on the other hand, PSU banks have also been trailing. Nifty Realty Index, like we were talking about earlier, 1% decline coming in for the Realty Index as well. Consumer durables are also seeing a bit of a knock. On the other hand, what is not doing well in this muted market, that is your Nifty IT Index, seeing a gain of about 0.2%, and that is why you can see majority of the IT index, IT stocks also dominating the Nifty 50 gainers list. Tech Mahindra, TCS, both of them seeing a gain of about 0.8 to about 0.2% as of now. We'll be watching out whether or not this, whether the market can pick up from the second half of the trading session. But for now, it's a muted market sentiment. Both the benchmark indices have been trading with a negative bias, so to say. It snapped its two-day gains as of now. But yes, with that, we have to come to an end of this edition of Opening Bell. Don't forget to tune in at 3 p.m. for closing, and we'll be understanding how the market is developed with our experts, and we'll be also discussing about individual stock movers that have grabbed the headline. But until then, signing off, do stay tuned to moneycontrol.com.